Hey guys, my name is John Marino. We're the developers of the Investx fund. My partner Vincent and I'm going to give you a quick demonstration on what's powering our investment club. You will not be running any technology or software. We actually do all of this for you, but I just wanted to give you an example to show you on how powerful our technology is to earn you money, and just give you a quick demonstration so you can see what's going on in the back end. This is a strategy. It's called peers trading. You can look it up online, or arbitrage, statistical arbitrage. You can take a look at it online. Essentially what it means is you're hedging two pairs, and in this case, if you look at the screen, you'll see the closing date. These are actually still running, and then you'll see odd chief and the NZD USD dollar. There's a buy, which is green, and a red, which is sell. This is a hedge trade. Statistical arbitrage basically just works by, to put it simply, when two correlated pairs that typically run together in the same fashion break from their normal, and then they come back together in a future time, they're guaranteed to make a profit. And that's how this strategy is based on. So we typically know what the profit is before we get into a trade, and what we're expecting the convergence to be when they come back together. And not to bore you with too much technical analysis, but this is pretty much how it works. These are the trades that are running. These are the opening days of some of these trades, and you'll see some of them are older, some of them opened up last year, this was even 2013, it's still running. You'll see the pairs that's hedged, which is, like I just said, the odd chief, that's the Aussie dollar, and the correlating pair that goes along with it. After that, you'll see where we got into the trades on the differential from the spread, and then the closing, what we're looking to actually get into it at a closing profit, which you'll see on the screen over here. Profit, as you can see, this trade is $360 in profit, 0.32% in profit, and the next one's down 0.13. Very, very, very low risk. This is the risk that's in the individual trade, so it's very, very, very low risk the way we trade, but it's a cumulative of a lot of trades being open at the same time, and then making money on some and taking profits when we need to. I'll show you each screen just so you guys can see. These are all running. These are all actually still open. If I go to the next screen, you'll see some more running trades over here. These are all still open as well, and the profits that we're either making in profit or loss is right beside this profit column. There's a few pages open of trades. I believe there's 4 pages. These are running still, and you'll see the dates that they opened. And this is the close trade. So on the 4th page, you'll actually see closing date. This is when the trade's actually closed, and what the profit and loss actually was of the trade. So you're going to see all green, because this is the way that it works. We know what the profit is before we get into a trade, and we really don't take a loss unless we choose to take one. But you'll just see all green. These are all the profits that we made in, there's multiple pages, page 6, page 7, they're all green. Doesn't matter what page you go to. Page 24, and you'll still see green on the side. And this is what we made on each one of these trades. So we make a little bit on each trade, but as you can see, when it adds up over time and compounds, it's a lot of money. To summarize, this account started on the page 31 is the first page. This account actually started on 3/19/2011, so in March of 2011. So it's been about, as of this video, about 6 years that this account's been running. And this account made a total, if you look to the right over here, we had 329 trades, 344% profit in 6 years. This account started at $25,000, and now it's at $111,000, so that's 344%. Our max risk on one trade, on an individual trade, was 3.25%, very low risk on a trade. The average risk is less than 0.5%. It's 0.19. The average trade length, win rate, we have 100% win rate. As we don't lose, we know the profit is before we get into the trade. Like I said, if we do want to take a loss, it's only because we want to close the trade down to reinvest the money. This is how this strategy works. It's very, very, very powerful, and this is why banks are allowed to make a lot of money. The currency market is by far the strongest market in the world. It actually trades at $5 trillion a day, rather than the stock market that only trades at $500 billion a day. So this is the reason why institutional traders actually choose the currency market over the regular stock market and stuff to make their money. There's a lot more trading opportunities, a lot more money to be made if you know how to do it right. But if you're interested, obviously give us a call. We'd like for you to join our community, and so you can be profitable too as well and make these high returns. And thank you very much for your time, and have a great day.